Most traders don't lose money because they picked the wrong stock. They lose money because they bought it at the wrong place on the chart. So what happens is people usually buy at resistance instead of support. So in this video, I'm going to show you how to identify support and resistance in a really simple way. What we're going to cover is how market structure reveals support and resistance, the tools that traders use to identify these zones, and then how confluence creates stronger levels. So after we do that, we'll talk about confluence, which is an important topic to understand to put everything together. So basically, the basics of support and resistance are: support is an area on a price chart where buyers are going to step in, and resistance is an area or a zone on a price chart where the sellers are likely to step in. So when we are trading or investing in a stock, we really want to identify these zones, and we want to buy at support, and we want to be cautious, or we want to take profits at resistance. So the first thing that we can do, and the easiest thing that you can do without having to use any technical indicators, is just look at the market structure of a price chart. So what we do is we look left on the chart first. We can mark down what was previously an area where price reacted, and we can look at the present time and see if the price is getting into those previous zones. It's important to understand that sometimes what was once resistance can now flip to support, and vice versa. So let's jump over to some examples, and we'll review market structure, and then we'll get into the other tools that you can use for finding support and resistance. So let's jump over, and we're looking at a price chart here on TradingView, and this stock is called SoFi, and this chart is a weekly chart. So what that means is that when we zoom into these candlesticks, they all represent 1 week. So what I've done is I've outlined on this chart these zones that you can look back to the left of the chart and see that they were important prices in the past. So this top bar, we can see that when SoFi first started in the sort of mid-20s, that's when price ran up to that zone in February 2021. And then in the end of 2025, we can see that was an important area where price got above, tried to flip it to support, but then failed. And then further down in and around the $14, $15 zone here, this was a support zone in the past. So back in 2021, 2020, the summer of 2021, this was support. People bought that up, and then it was lost. And present time, this was also an important zone in the early 2025s. And then presently, the stock has retraced into this zone again. So this is another zone where potentially buyers might step in, and support could be near for SoFi. And then further down, what was once support and resistance here was some support and resistance in this area. And then price came all the way back down to that zone during the tariffs in March and April 2025. So market structure is just something you can quickly look at on a price chart. You can look back in history, see previous highs, potentially flipping to support, or in this next example, we can see Roblox, where back in 2021, a previous top was also a resistance zone near the end of 2025. Price just couldn't get above this zone, and it's come back down quite a bit to this range here, which was once support in and around the tariffs in April and March 2025. And previously, back in March 2022, this was resistance for a while. Then in August 2022, it was resistance as well. There was some resistance here, support, and potentially this is another support zone. So that's the first thing that you can do, is just easily look at the market structure, what was previously resistance, what was previously support. In the present time on the chart, that price history, that price memory might be an area to watch for support and resistance. So after you do just basic market structure, there are several tools that can help you identify support and resistance that a lot of traders use. So we're going to review these really quickly, but below this video, the first link in the description, you can come join our free stock trading for beginners group on a platform called School, which is really great. In this group, you can post questions, post your charts. We do a weekly call, And in the classroom section, there's actually a course and there are modules and lessons about this strategy. And here you can get a deeper look into moving averages, the Ichimoku cloud, support and resistance, and so on. So if you wish, the first link in the description, you can come and join this free group. So here we're going to run through things, but maybe a little bit quickly. If you want a more in-depth look, then check out that group. So the first tool that a trader can use to find support and resistance are the moving averages. So these act as dynamic support and resistance. So they move as the stock price moves over a period of time, and they can be support when price is above them, and they can be resistance when price is below them. So we can jump to a chart here. This is stock Shopify. And again, this is a weekly stock chart. So all these candlesticks represent 1 week. And in the present time, we can zoom in and we can see that over the last few months, the 100-week moving average has been support and the 50-week moving average has been resistance. So support is down here and resistance for the moving averages is up in this range. So what these moving averages do is they sort of flatten out the price and average them based on a specific timeline. So the 50-week averages the price of the last 50 weeks, the 100, the last 100 weeks, and this darker line is the 200-week moving average. So that is one indicator that can be used. There are other indicators. The next one we can quickly look at are Fibonacci retracements. So these are areas on a chart where the stock can pull back to, or as they approach these levels, they can act as resistance. Many traders watch these levels when looking for potential support and resistance. And many charts will show good support and resistance for Fibonacci retracements. One that I have an example of here is actually a crypto Ethereum. So on this chart right here, we have a Fibonacci retracement, and I can actually just draw it again here. I'll hide this one. We take our Fib tool and we go from a swing high to a swing low. And what that does is now this plots out these Fib retracement ratios where price is likely to react as support or resistance. So we can see in this zone, this 886 level around 4,000 for Ethereum was resistance, was flipped to support temporarily and then lost. We can see this level at 3,000 or 2,900 was support until it was lost. So basically we closed candles below and then we flipped it to resistance. So what was once support was flipped to resistance. And now Ethereum has come back down to the 2,069 level. And this has been resistance and support over the last few months. So these Fib retracement levels are another tool that traders can use to identify what is potential resistance on a chart and what might be support on a chart. And next, we can use the Ichimoku cloud. This also provides multiple support and resistance signals. The cloud itself acts as support and resistance, and there are conversion lines and baselines which offer an area where price may react as well. So for this example, we've got Tesla on the chart, and we can just see here that when price broke out and did a big back test back to this cloud area, this cloud acted as support, and this was a good support entry area for Tesla. And currently, where we are in the present time, the end of March 2026, Tesla has also done a breakout, consolidated at resistance, and is back testing the cloud at the moment. So this could be a good potential area of support for Tesla. Now, there are also other indicators that we can add to the Ichimoku cloud. And the blue line is the conversion line, which is the short-term momentum line. And the orange line is the baseline. And these also act as support and resistance. We can see when Tesla lost this line, it was flipped to resistance. And when it lost the baseline for a few weeks, it was also acting as resistance on this temporary downtrend. So the Ichimoku cloud is another tool that you can use to find and identify support and resistance. And then the last one we're going to cover is a Gann square. And this helps identify symmetry and reaction zones on a price chart. So there are some good examples that are adhering to these zones. One that we can look at is a Bitcoin miner called Iron. I've just circled a top area here, a resistance area here, and a potential support area here. And when we put on our Gann square, we can see that these Gann arcs labeled a zone where price was going to react, and this zone acted as clear resistance. And then price came back down and wicked down to this horizontal Gann line, and that was great support back at the end of 2025. And currently, price is interacting with that zone at the moment. Another example we can look at is Bitcoin. I've highlighted some resistance and support zones on this chart as well. And if we layer in a Gann square on this chart, we can see that in this area, we can see these Gann arcs identified a zone where price was going to potentially react, and it got sold off here. It was saved by this Gann angle for many weeks, acting as support. The top of Bitcoin right here was right where this Gann horizontal line was at 126,000 up in that area. We can see we wicked down to this line again. We came back up to this horizontal line. And then in the early parts of 2026, when we had a big sell-off, we came down and stabilized around this blue horizontal line. So that is just another example of the Gann square offering traders an area to see what is potentially resistance and what is potentially support. I just have one other example here with silver. So this shows us resistance back in the 80s. It shows us resistance in the 2008 area, 2011 resistance. We've got some support here in COVID. And then recently we've had a big run up on silver, and early part of 2026, we peaked to a resistance area. And if we layer in a monthly Gann on this chart, we can see that even back here in the 80s, this price chart ran right up to a horizontal resistance line and touched it almost perfectly. We can see here, we came into this area and price reacted right around this horizontal line very nicely there. Here, touched for 2 weeks, perfect rejection on this horizontal line. We came back down and wicked right down to this arc. And then in the present time, we can see silver wicked right up to the top of this line at 120,000 in January of 2026. So here is just a final example how this Gann square tool can help traders identify what is possible resistance and what is possible support. So the power really comes in with this word confluence, and that means finding an area that has confluence, meaning finding an area on a price chart where multiple tools line up. And that's going to give you the better probability that that zone is going to either act as resistance or it's going to act as support. So, examples of this is previous resistance flipping to support in that area. There potentially might also be a fib retracement line. There might also be some moving averages or a Gann square nearby. So when these signals line up in the same area, probability of a reaction increases. And that's why we also say that support and resistance are often zones, not perfect prices. So you don't need to buy the perfect bottom. You don't need to sell at the perfect top. When you can identify these zones, they will help you identify good entries and good exits. So one example I've got for this video is this price chart on a stock called MP. And we can see here what was clearly a bottom in this zone was actually a trade I put on last year. And once we start layering all the tools we talked about, we can see some great confluence in and around this zone. So the first thing I'll layer on is the Ichimoku cloud. And we can see on this particular week, price wicked down to touch the top of the cloud. We can put on some moving averages. We can see the 50-week moving average is right in that zone, and the 100 is in that zone. So there's some good confluence of support in that zone for the moving averages as well. We can put on a Gann square. And what do we see when we take these other things off? We can see that we have a Gann arc and a Gann angle right in and around that zone. And then we can put on a fib level, and we have a fib retracement in and around the $20 zone as well. So when we layer them all in, we've got a fib, we've got a Gann square in that zone, we have moving averages in that zone, and we've got the Ichimoku cloud in that zone. There is some good confluence that this area is support. It's a higher probability that in that area, buyers are going to step in. We want to put on an entry where the likelihood that other buyers are also coming into that zone, that's called a support zone. And then you never want to buy where the likelihood that other sellers are coming in, that is a resistance zone. So the rule that you can go by when you start looking into trading is really that you only want to buy support and you never want to buy resistance. So you can ask yourself some questions. I ask these when I consider trades. Is the overall structure bullish? Is price near support? And is there confluence in that zone? So we want those three answers to be yes before we even think of a trade. And if not, then we simply wait. We're patient and we look for other opportunities, or we wait for price to come and enter those zones. So what I noticed after reviewing a lot of trades, especially with people inside our community and some other beginners that I've talked with, is that they tend to just enter trades at the wrong place on the chart. But when you start focusing and learning how to identify support, how to identify resistance on a price chart with those tools that we spoke about, I find that a lot of people start to be more patient. They're going to approach things in a more calmly manner. Things are much more structured. They'll have rules. And then the trades that they're in just become easier to manage as well. So to recap this particular video, identifying support resistance comes down to three main ideas that we talked about. Firstly, just start with market structure. Get a good lesson on market structure. We've got some videos on this channel that explain market structure, some breaks of structure, changes of character. So that's your first baseline to learn and to understand. And then you can start layering these tools that we spoke about, moving averages, the fib retracement levels, the Gann square, the Ichimoku cloud. And we want to look for areas of confluence where several of these line up. The probability of that support or that resistance level holding is higher. So once you start focusing on these levels, I think trading is going to be more structured and less stressful as well. So if you'd like more information on the strategy, more information on those tools and lessons, then certainly come over to our trading group on School. Again, you can find a link below. You can come here. We do weekly calls every week. We've got a classroom with a strategy course that you can get that's absolutely free. You can go through all those lessons as well. So I hope that you found this video useful, and I look forward to talking with you in the next one.